Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And I am excited to tell you that we have an interview with John Wake tomorrow, Monday morning, 8 a.m., which will be September 26th. John has been on the channel before. We've talked about statistics in Phoenix, talked about the housing market in general, talked about, comparison for today's housing market with '08. But John is a frequent writer and a housing expert. He recently put out an article in Fortune that we are going to look at together, talking about why housing has to fall. If you watch my channel, you know that I, at least in the short term meaning the next 6 months, I don't see it, at least as a median home price. There will certainly be areas like Phoenix that crash or go down significantly. But as you will see in this article from Mr. John Wake, he sees it differently. And I seek information that is different than mine. I believe anybody who is doing fundamental analysis should never have kind of confirmation bias. So I seek wisdom. I seek experience from others that I respect, like John, because I'm always questioning myself. That's how you get better. So we are going to look at this together today, and then John and I are going to talk about it tomorrow. So I want you to see what I am seeing so you can understand my line of questioning. So let's bring up the article. Let's go through it together, and then we will, link this, I guess, with John's interview tomorrow. So John Wake, you can see it here in Fortune. Came out Friday the 23rd. He has graciously agreed to be interviewed Monday morning at 8 a.m. So John, if you ever see this, thank you so much. So the fundamental reason house prices will fall this fall. Again, not something I believe, but I trust John and respect him. So I am interested in seeing, hey, what does John see? What am I missing? Am I missing something? Am I reading the data wrong? This is what I think you have to do. And it's frankly what I think a lot of crash channels don't do. They are definitely biased and don't even consider the other side. But here we go. Again, this is not what I'm calling for, but let's see what John has to say. First, the prices people expect tomorrow influence demand and supply today. True statement. Economists say fundamental economic factors such as interest rates and household income determine house prices. For some unknown reason, economists don't consider people's expectations for future house prices to be a fundamental factor in determining current home prices, but they should. Interesting. That's an interesting statement. You have heard me say, pretty much as John calls out, I believe housing is and has always been a payment thing. What John is saying is, hey, economists, you're being short-sighted. You also need to consider expectations. I think that's very interesting insight. Economists have done a ton of research on this general idea. Unfortunately, they call it a ton of different things, which is very confusing. The general idea has been called price expectation, extrapolation, bias, all these. Yeah. Momentum. Yep, I agree. It has many different names. Yep. Despite all the different names, the idea seems obvious. If you expect house prices to be higher in the future, you are naturally less willing to sell now, more willing to buy now, and more willing to pay above current market price for a house. The expectation causes house prices to go up even more rapidly, which causes people to become even more confident prices will continue to go up. Yeah, that paragraph right there is exactly what 2005, 2006, where it just started going higher and higher, and water cooler conversations, and everybody it was a feeding frenzy. And obviously we know how that ended, pretty bad. If you expect house prices to be lower in the future, you are more willing to sell, less willing to buy now. Makes sense. And less willing to pay current market prices for a house, which creates negative feedback loop. Okay, interesting. It's not just house buyers and sellers who are affected. When prices go up, lenders also tend to extrapolate the increase in prices and their increasing profits out of future. And in turn, they may become more willing to lend money, leading to more and more chasing houses. Again, as I said, this was 2006 and 7. on steroids. He is absolutely right there. The opposite of standard economic thinking is higher prices are supposed to reduce demand. It's true higher prices will reduce demand in the long run, but in the higher prices make people think prices will go even higher in the near future. High prices can cause demand to increase in the short or medium run. The reverse happens with falling prices. This is kind of consumer psychology. I like it. This is an interesting way to think about it. Perhaps that's why economists don't call price expectations fundamental. It's just too hard to explain that with a house, the secondary effect of price changes, the impact on future price expectations, can sometimes temporarily overpower their textbook effect. I like it. I like it. The point is whether prices are moving up, down, or sideways, many people expect the current price trend to continue into the future. Okay, I like that. The fundamentals. Mortgage rates are one of the most fundamental of all housing market demand drivers. When you're borrowing for 30 years with small down payment, mortgage interest rate changes have a huge impact on monthly payments. Totally agree. Starting in late 2018, mortgage rates fell for 2 years. Yep. Fed broke housing. I've said that. Interest rates stopped falling 21. Stimulus checks, nevertheless, continue to skyrocket into May of 2022. Many investors who made a ton of money in house price appreciation doubled down, borrowing as much as they could. Absolutely. Many potential live-in homeowners wanted to buy before prices increased even more, fearing they might be priced out. I agree. House prices continue to rage, blah, blah, blah. Many people were extrapolating price increases. Everyone's offering tens of thousands of dollars over list. Yeah, that was not healthy. Then in 2022, mortgage rates skyrocketed. The music stopped and the punch bowl was taken away. Amen to that. House prices leveled off. Expectations for future price increases started to shrink. Today, the future price expectation part of demand is a lot smaller than it was last spring. I agree. The takeaway is demand will continue to fall for many months, regardless of mortgage rates, because people are slowly lowering their expectations for future house price increases. Housing demand is falling along with expectations for home price. I agree. Another round of Fed rate increases would cut demand immediately, in addition to fading demand to falling expenditures for future prices. Median house prices have already started to fall in several cities. Phoenix, Boise, those are different reasons. And prices fall enough for long enough people to start to expect price declines to continue, the fall, the future, Okay. It seems extremely likely that many home buyers tune in will change from last year. Let's buy ASP to let's wait and see. I agree. And some of that will be a choice and some of that will be because they can't, right? Demand is an interesting thing, willing and able, which a lot aren't able today. In addition, some potential sellers will slowly become more interested in selling when their second home or rental property is no longer appreciating more than it did last year. I guess we'll see. The future price expectation part of demand will likely fade for the next 2 years. So again, we're going to talk to John about this article tomorrow. I will say a couple of things. First off, John is playing chess. His economic background is awesome. He is looking at complex things that I frankly haven't thought about. Very interesting. It's going to be fun to talk about. There was a lot of talk in that about demand destruction. I believe that is obviously phase one of the crash. We've already experienced the big drop with more to come. I believe what is not in this article, and it'll be fun to talk about, is supply destruction. I do believe that housing is unique in that if owners feel like they can't get what they want, they will just hold, at least for a while. Again, if you're on my channel, I'm not making any big changes in my housing calls until March 15th. I think the winter is going to be epically slow. I think there will be markets like Phoenix who get crushed because iBuyers got stupid. There'll be markets like Boise that get crushed because they fundamentally demand outstrip supply, and now it's reversing. But the country, I don't see it. It may happen after March. It may happen in the next year if we have raging unemployment. We have interest rates at 9%. We have an economy that's contracting 10% GDP. It could happen. We could be in World War III. There could be lots of things going on. I don't know. But yeah, I thought this was a very interesting article. Very well done. I hope you enjoyed it. It's another way to look at economic information, which I think is awesome. And again, we will be speaking with Mr. John Wake tomorrow at 8 o'clock. That interview will likely be posted 5 or 7 o'clock tomorrow evening. So I hope you enjoy it. I hope you enjoyed this article. Again, follow John Wake on Twitter. He is a great follow on Twitter. Thank you very much. Bye.